Well, on that note, to understand the implications of IMF statement and their re-rating in terms of outlook, let's welcome Garima Kapoor, economist and senior vice president at Elara Capital. And good morning, Garima. Thanks so much for joining us. And first of all, help us make sense of IMF statement yesterday. They've said a lot on global growth as well as the Indian economy and where they're expected our economy headed going ahead. But let's first focus on India, and the outlook now has been reduced from 6.5% to 6.2% on the back of the tariff impact. What is your sense on this, and do you believe that this is a fair adjustment and a fair assessment of where we are headed in this financial year?
Hi, good morning. In India's case, the 6.2% that IMF has set out, I would say is fairly realistic, although it is 30 basis point below what RBI as well as what the ministry had put out in terms of expectations. In my assessment, the estimates of both RBI and the Ministry of Finance should come down, get revised downwards as we have more clarity on how the trade-related uncertainties pan out. But given everything else, and given that India's business cycle is turning, with both government and RBI turning pro-growth, the outlook for rate becoming more clear and with a more aggressive rate cut cycle, crude below 67, 68 at Brent, and dollar below 100, I think the tailwinds for Indian economy in terms of cyclical terms are far more than what they were 6 months ago. So I would still say everything else being equal, notwithstanding the correction in global economy that we anticipate, India should still grow at a handle of 6 to 6.2%, and the assessment is fairly realistic.
All right. Hi, Garima. Good morning. This is Shrishti also joining in. But Garima, I was just referring to one of your earlier reports saying that the shipping to and from China is yet to show a bit of a slowdown. And given in the context with the latest commentary coming in from President Trump, where he says that the tariffs on the China will come down, but they will not go to zero as of now. But there is a possibility that what is being imposed now, this will come down. In this context, how do you see the second half of this fiscal panning out? Do you believe that the second half is expected to be a bit better versus the first half?
See, it all depends on what kind of discussion and what kind of consultation both countries are able to bring on the table. But fair to assume that US's average tariff, which used to be about 2.5% or below there, is unlikely to stay there. Its average tariff is expected to come up, maybe in the handle of about 10 odd percent. It is unlikely to stay at 140% or 50% for China, what it is, but 10% probably should be the new normal that the world economy should work with. Now, having said that, issues between the US and China do not just restrict to trade, but they also restrict to a variety of other things, including tech war and patents and otherwise security adjustments. So, in my assessment, the uncertainty phenomena which has gripped the world economy is likely to persist. While the second half can be anticipated to better with the expectation that there will be some bit of negotiation that is likely to happen and some bit of clamp down from the current trades between US and China. But it is likely to be a new normal, notwithstanding the clampdown, because we have never seen this kind of average tariff specific between US and China. So in the near term, we're likely to probably address greater issues of uncertainty rather than issues relating to tariff related hikes.
Okay, point taken, Garma. And also in the latest statement of IMF, while they have said that we are still a little away from a global recession, they have, however, hiked the probability of one from 17% back in October to 30% now. Do you concur with this? And where do you see global economies headed, especially US? Do you believe the US is at a verge of a recession now?
Yeah, current data, whatever has come down till early part of April and till the end of March, does not indicate that we are likely to hit recessionary situation immediately. And if this tariff-related uncertainty is clamped down and there is much less uncertainty than what it was about a week or 10 days ago, then things should look better. Indicators such as consumer confidence, which came out with month of March in the US, did indicate some bit of uncertainty relating to tariff, already is reflecting in consumers' behavior. However, remember, we are entering this phase with with relatively stronger corporate balance sheets. US's biggest challenge is likely to be in the near term how the movement on yields is. If the 10-year yield and the yields in US respond far too aggressively, then the financial conditions are likely to tighten very, very sharply. And if the financial conditions tighten, then one should anticipate Federal Reserve to step in, because if the tightened financial conditions persist for far too long, then US recession is more likely. But given the current macroeconomic backdrop and the incoming data, it doesn't seem like we're hitting recession immediately anytime soon. Notwithstanding, of course, the one thing that you should watch out for, as I mentioned, is the movement of interest rates and the currency markets.
All right, Garima, we let you go on that note. Thank you so much for taking the time out this morning and sharing your perspective that how do you see the Indian global economic outlook moving ahead.